Yeah, so we stopped here yesterday where we were looking at the parts of the MT4, the trading platform where we will be trading. So basically, I would expect like guys to continue um exploring the MetaTrader even when we are not in class. So I'm sure most of us know how to use the MetaTrader, and you know where most of the buttons and some of the functions are. So today, what I want to do is what we will be doing is basically identifying each and every one of us. Every trader has a different personality. The way they are different type of doctors. They are who we call day traders. Basically, there are different types of traders, right? And after this class, I would implore you to do more research. But because of the summary, because of the summarized nature of what we are doing, I have limited it to 4 types of traders. That is the day trader, the scalper, the swing trader, and the position trader. So there are different types of traders. Every trader has different personalities. Day traders are looking to have enough time during the day to trade. So they want to buy and sell positions. They want to be able to manage their positions throughout the day. They want to be able to look at their devices during the day to know at some point in time, usually because those type of traders, the news, because of the smaller time frame in which they will trade, which we will learn soon, they are forced to manage their trades maybe on an hourly basis. The same thing applies to scalpers. Scalpers look for different places in the market to target momentum. The swing traders are the ones who have enough time. Swing traders pick trades between weekly and monthly time frames. Sorry, weekly and daily time frames. So they can hold positions for 3 to 4 days, 2 weeks. They don't have enough time to be checking their trade, and they are always at the beginning and the bottom of trends. That is where they position themselves. That is swing trade. The position traders are more of the big boys, the big banks, those who trade, on the monthly and the yearly time frames. They utilize a lot of fundamental. They are different. There are other type of traders. They are different type of traders. But during this course, you be able to develop and find yourself. So after this class, just write something down. Go and research more about it, because I have discovered that it is important from the outset to know and understand the kind of trader you want to become. Usually when we start trading, we just start buying and selling anywhere, anyhow. But to really become successful, if you really want to become a trader, I'm going to tell you, it's like, so to say, I want to use this example. The way we criticize African schools for teaching us so many things instead of taking us directly to what we want to become, in life. And maybe you want to do engineering, and when you are in SHS or GSS, they teach you about art and the rest, which it doesn't really make sense. So I've discovered that it is important from the outset to know and understand and direct your energy towards the kind of trader you want to become. So from this point onward, from this class onward, I want you to discover yourself, pick the type of trader you want to become, read more about this type of traders, read more about them. Then anything we'll be doing during the class, you'll be able to mold all the lessons you are getting from this class into that box of trader you want to become. Am I making sense, guys? I hope I'm making sense. And that is how you want to be in this business. it is imperative that you master a specific type of trading style, that which you will discover after careful analysis, carefully assessing yourself now and in the long run as you begin to trade. So as time goes on, you might maybe see that this doesn't fit you, but self-discovery is it will take a long while. But right now, we kind of know the kind of people we are. We know we'll assess ourselves after this slide. But it is very, very important to know so that you don't waste time doing something else. Because in trading, you need to be master of something. You need to be master of something. You can't be doing everything at the same time. You need to be master of something if you really want to become a trader. A trader's journey is a journey to find oneself and to adequately find comfortability while trading. So me personally, I'll use myself as an example. I'm a swing trader. Although I know other strategies, but I'm more comfortable swing trading because it gives me enough time to do my things. It gives me, I'm not very hyperactive to be day trading, within 1 hour, 2 hours. No, I'm not very hyperactive. I know myself. I've decided to go with swing trading because it gives me the flexibility. It doesn't give me emotional reaction to price. So I'm comfortable with swing trading. And you won't say I should go and do scalping. The kind of performance I'm going to give you when I'm swing trading, I won't give it to you when I'm scalping because it doesn't really match my personality. Trading I discovered that trading is more of a journey to your own mind than it is to clicking, buying, and selling and making money. Although those will come later, but for now, you need to understand the kind of journey trading is. So we'll answer some questions. This is very, very basic. I didn't have enough time to finish this slide, but earlier on, I told us to have like a pen and paper somewhere. You have to answer these questions truthfully. This one, nobody is there. I know a lot of us play, a lot of us bet a lot, sport betting, a lot of us bet a lot of, most of the time. So do you like betting, sport betting or any other type of fast sport? Are you comfortable betting? You bet your money in maybe on a team. You are comfortable with a team losing. Do you like fast sports? Are you comfortable with losing your money in during a match day? You should answer that question somewhere. How busy are you? From 8 a.m. to 8 p.m., how many hours are you free? This is important to know the kind of personality that is going to fit in yourself. Please, as I'm reading or as you are reading the question, just write it down because the next slide is going to put you in a category of the kind of trader you should be. Are you very busy? Do you have enough time in front of your PC throughout the day? Do you have enough time to check your phone? Do you have enough time to continue analyzing? If you have enough time, maybe you want to be a day trader. If you don't have enough time, maybe you want to be a swing trader or a scalper, or you have a little bit of minute during the day. So all this will put you into a particular type. How much free time can you spend in front of your device? Like what I just said. How patient are you? Are you very patient? Can you hold a trade for a long time, or are you that person that wants to? I know ladies are most of the ladies I know are scalpers. They wouldn't like see money, floating for a long time. They like fast profit. How patient are you patient like that? Can you see money and relax with it like that? Can you wait for 13 days for a $9 profit? Can you do that? Are you patient enough? Do you think if something is in profit, you can let it go for a long time? And this question is also, would you take $200 profit now or $205 tomorrow? $200 profit now or $205 tomorrow? Some of us want to take a $200 now. It's fine. Some of us 205 tomorrow because it's just tomorrow, right? So why can't I wait for tomorrow to add one day? This will allow you to understand yourself more. They are behavioral questions. So would you like to make $4 every day? Let's say you have a $100 account. Would you like to make $4 every day for 5 days? You know, so or you rather be in a trade. We try to make Monday, Tuesday, Wednesday, make $4 every day, or you are comfortable with taking only a $20 profit at the end of the week. Are you that kind of person? Do you have patience to take small profits, or you want it in a lump sum? So number 7, would you like to, if you take a $10 loss every day to make $20, or you risk $100 to make $250 in a week? Are you very emotional? Are you someone who can easily come back from setbacks? If you are very emotional, you wouldn't fit in a smaller time frame. And when I say smaller time frame, I hope we understand what smaller time frames are. If you are very emotional, all this should now you should be at least assessing yourself. Are you very emotional? Are you someone who can easily come back from setback? Because the type of trading you are going to accept as yourself would determine the kind of losses you deal with. There are losses in trading. We are going to take losses. You have to lose. You will lose. All of us lose. But the difference between a good and a bad trader is how much they make in regards to how much you lose. You are going to lose. Trading is not everybody. People try to sell you things and they are all sweet about it. I'm going to tell you, you are going to lose money. But can you start losing money every day and you won't be able to mess your mind up? Or do you would you like to take one loss in a week? All this, although these are just questions, when you start trading, you would find these answers in depth. But for now, just answer them. Good. If you're using a phone, the next section, perhaps you can maybe screenshot or have a good look at it. Those are just joining. I think you guys are quite late, so maybe you have to catch up on the video. I'll post that very early so you guys can have a. So the next slide. This is what I call the trader's table. Everybody should look at it very well. Try to understand it. I think this is the last slide for today. After this slide, you're not going anywhere anymore. This is the last slide for today. And I'm trying to show you guys this. I'm trying to be honest with everyone. Everything we will do from this point onwards, everything we'll do from this point onwards, you need to fit inside one of these boxes. You need to fit inside one of these boxes. This one might be out, but you need to fit inside one of these boxes. All what I've asked, all the questions I've asked you, all what I've asked you, you should be able, if not this evening, tomorrow as you think about it, you should be able to fit into find a box to fit in. And like I said, go back also and look for other type of traders and study their characteristics. Every trader has a characteristic. Look for it, read about it. Everything we do would be, you would have to be able to fit it in that box. All right. So let me just try to explain what is on the table for you. But it is imperative for you to know the kind of trader you want to become. You should know from the beginning. Do you want to be an engineer? Put that boy in the engineering school. Let him go. Don't go and tell him to do carpentry. Then he wastes time and he's not able to specialize himself over time. That is the idea behind this, and that is how I have found it to be very effective. So the day trader, you see over here we have the type of traders, and over here we have the time horizon, the risk profile. This one is subjective. Risk appetite, pip goals, and trade frequency. We'll start from the day trader. Like I said, and you have to still read about it. This is a summary. You need to go further and dig and read about it. Try and fit it in yourself. A day trader is somebody who trades during the day. It's somebody who opens a trade before US opens or the European market opens and closes at European market close. It's somebody who wants to open a trade in the morning and before they sleep, they want to close it. That's a day trader. And there's a lot of strategies that fit in that. So as a day trader, your time frame, I hope we all know what a time frame is. When I'm talking about time frame, when you look at your MT4, you see the time frames at the top there. You have the hourly, we have the daily, we have the weekly, and the rest. Some of us are trading already, so we know this. So for those that don't know, check your MT4, you see it. So as a day trader, your time frame should be daily, H4, the 4 hour, and the 1 hour. That's the day trader. Write this down. A day trader analyzes on the daily, analyzes on the 4 hour, and take trades on the 1 hour. We'll explain that over time in a bit. So a day trader wants to trade in between this time frame from 1 hour to daily. This is what the day trader is looking at. A scalper is also a day trader, but a scalper is less a less patient person than a day trader. A scalper wants to do 4 hour, 1 hour, and 15 minutes. Some even do 5 minutes. I have a friend who trades 1 minute. 1 minute. He trades 1 minute chart. So within 1 minute, profit or loss, you are out. Some people are like that. I can't do that. That's why I said you have to read more about it. Read more about it. The swing trader, yes, this is me. This is me, yeah. I'm the one speaking. The swing trader are comfortable with longer time frames, weekly, the daily, and the smallest time frame the swing trader looks at is the 4 hour time frame, the smallest time frame. Please write all this down. We'll use it. We'll need it. You need it. Just put it down because. And the position traders, they are yearly people, time zone. So they want to see the gross domestic product of this year. They want to see the budget statements of a country. They want to, the position traders, they want to look at interest rate policies. That is not what we're after here. So for you to be now I'm jumping to risk appetite. The risk profile, we'll discuss that later. So as a day trader, if you answer those questions very well from the beginning, you see as a day trader, your risk appetite should be from semi to a high risk. You would notice that day traders, you trade more. You usually you put more trades on the line during the day than a swing trader. A swing trader will only do like 3 or 4 trades in a month. A day trader will do like 3 trades in a day. So if a day trader will risk 4, if a swing trader will risk 4% in a month, you can be doing that 4% in a day. So you need to be able to at least lose 4% of your account in a day. That's why I said, and that's high risk for me, because I don't expect a trader to risk 20-50% of their account. For what? Nobody is in control of the market, so I don't see a reason why you have to risk 4%, 5%. I don't see a reason why you have to risk 20%, 60%. Anything can happen. So the risk appetite of a day trader should semi to high. Scalpers have a high risk because for a scalper to trade, they are looking for 3 to 15 pips. So for these 3 to 15 pips to make sense, they are usually highly leveraged and they take more trades. They take more trades than a day trader. If a day trader takes 3 to 5 trades, I think I mixed this up. If a day trader takes 3 to 5 trades, the scalper is taking 5, 15 to 20 trades because they are looking for small time frame, from 1 to 15 minutes. They want to close the trade. 15 minutes, they close the trade. They want to go in again, take it. Take 2 pips, 3 pips a day. So a scalper has a high, you need to be able to put more of your capital on the line. A swing trader, for example, has a low to semi risk mindset. A swing trader has a low to semi risk mindset. They are not very emotional people. They are very emotional people. So they decide to take very, very, conservative use of their trades, the conservative use of their capital, and they are patient enough to wait for weeks without trading. It's always important to know yourself in this situation. So I'll bring it down again. The day trader, now we are talking about the pip goals. A day trader is looking for 15 to 50 pips per trade. 15 to 50 pips per trade. A day trader is looking for 15 to 50 pips per trade. Shouldn't be looking past anything past this. If you are a day trader, you shouldn't be looking past anything like that. So you need to know yourself. You can't say you are a scalper and you are looking for 50 pips. It's not going to happen. You lose all your money. You need to know yourself. You need to have realistic targets with the kind of trading you have employed. You need to have realistic target. A scalper won't look for 100 pips on a 5-minute chart. You are trading 15 5-minute charts. You are looking for 100 pips. Are you joking? It's not going to happen. A day trader is looking for 15 to 50 pips, some per day. I know somebody who only looks for 15 pips a day. If it gets fine, if it doesn't get fine. But when it gets 15 pips, it's done for the day. A scalper is looking for 3 to 15 pips per day. 3 to 15 pips. By now, I'm sure we all know what pips are. Scalper is looking for 3 to 15 pips per day. Usually, this is what kills people, right? Some people might have, they don't have realistic targets when trading. They overreach. Usually, you might have positions in profit. You might trade and use in profits, and maybe you have identified as a day trader. You pick the trade on the 4-hour time frame. Usually, currency pairs have a range every day which they can go to. That's also advanced. You need to know all those also. So as a day trader, Euro USD for example has like I think 25 to 50 pips range that it does per day or more even sometimes. So as a day trader, you won't be looking for 100 pips a day on Euro USD. The occurrence that is going to happen is way over realistic. A day trader, a swing trader is looking for 70 to 200 pips. I've had pips of 250 or 300 in very good months, like in a very good trade. That has happened before. So a swing trader is looking for this because their time frame is weekly, daily, and 4-hour. They are able to let trades go in profit for quite a long time. And the more the time frame, the more the pip range. That's the basic idea. So if you're a day trader, you can't be looking for 200 pips. You can't be looking for 200 pips if you're a day trader. In a day, it can't happen. You blow yourself out. Position traders, the banks, they are not looking for. Actually, this is very subjective. Some bankers or some banks have scalpers. But institutional traders, the hedge funds and the rest, most of the people managing the accounts they trade with fundamentals, like I said. So they can be in trades for months and years until something changes fundamentally in the economy. That's how they trade. But you don't need this. We don't have the power to do this. Lastly, trade frequency of a day trader. A day trader is looking to go in and get out in 3 days. I said 3 days. three trades. A day trader wants to pick at most 3 trades per day. A day trader wants to pick at most 3 trades per day. 3 trades and you are done. I told everyone to get like a journal if you were on the sky on the what they call it, the Slack group. Every trader has a journal. I have like 5 books here where I write trading stuff. So all this, you need to put it down. Everybody needs to record themselves. Like I said, it's a journey of yourself. If you can't find yourself, I'm not sure you'll be able to trade. You need to. So a day trader is looking for at least 3 trades a day to make him this target. A scalper, I know a lot of scalpers that don't follow enough rules. Scalpers are rebels. They are 6 to 9 trades per day. They want to scalp, take the small one on top and go out. Take the small one and go out. Some go at most. Some go a lot more than this. I've just put this because most of us are not very okay with trading yet. So to be moderate, to not be too elaborate, that's why I've done it 6 to 9. At most 9 trades a day as a scalper. A swing trader is looking for 3 to 7 trades per month. In a month, sometimes you won't get anything in a month. I can testify to that. It's not that you don't see, that's the issue. Let me just address that. It's not that you don't see prices moving and you can't just sell. Anybody can randomly sell and buy everywhere. Everybody can trade, but not everyone can be consistent in what they are doing. If I give my phone to my grandma to click sell somewhere she doesn't know, you'll be surprised she'll make profit. Does that mean she's a trader? Can she do the same thing tomorrow and next tomorrow and tomorrow again? That is what differentiates the traders. The consistency in making the money over time. Not everybody can trade, everyone can do it. But there are some things that separates people. There are some things that separate us from each other. So the swing trader is looking for 3 to 7 trades max a month. If he takes 5 trades, at least if 2 goes to losses or 3 goes to losses, he is still able to survive. And the position traders, they might go years without taking any trades. So they are looking for 1 to 3 trades a year. You know, they've analyzed US economy for the past year, at the end of the year, and they are waiting for something to happen before they invest in the US. And that's all they need. And they just watch it go. All these variables from the questions we asked ourselves, from this, the trader's timetable, and the research we are going to make later on, should be able to allow us identify ourselves. After identify yourself, anything else we'll be doing, if we are analyzing a big time frame chart, you know, okay, you are a day trader, you are going to put it into your own context. That is how I want us to follow this class, or else we can't attend to everybody. And in real life, that's how it's going to be. So we could see under here, I wrote all variables are set ideally to moderately, because these are just moderate for us to, this is set, is not too extreme, is not too far. All the variables in the boxes, they are moderate. They are not too much or too less. They are set in the middle. So it says here, the smaller the time frame, the more frequency of trades. So if you are a smaller time frame trader, for you to hit targets, for you to be a scalper, you'll be taking more trades than swing trader who is taking trades on monthly, because they wait for weekly candle to form and everything before they take the trades. And a scalper is looking at 1 hour to 15 minutes. So the smaller the time frame, the more risk appetite and comeback attitude you will need. A scalper can take a loss much more than a swing trader can take. You are going to take losses. So are you okay in losing 4 trades a day? Can you lose 4 trades a day and still be sane? Can you lose, let's say you have $500. Can you lose $20 a day and you are still fine? I'm saying $20 because of your risk. I don't want to mention other money that's way up. So the smaller the time frame, the more the risk appetite and the comeback attitude you will need to trade. That is very, very important. You need to know yourself. The bigger the time frame, the lesser the time frame of your losses. The smaller the time frame, the more frequency, the more you will trade. So the more you trade, the more space it is for losses, and the more space it is for errors to happen. Are you ready? It's all a mind game. No matter what, you can learn everything from this course. You will still need to master yourself. That's why they say trading is 70% psychology and 30% knowledge. In the end, you know everything you need to know. But if you can't master yourself. If you can't control yourself, you won't be able to make it. So I think that's all for today, guys. That's basically all for today. That's the introduction. Anything we do on from here, we are going. Okay, I think it's left with one slide. Sorry. Okay, this is just something small. Why do traders fail usually? Why do traders fail? A lot of things people don't talk about. Personally, I'm lucky to even be talking to you guys because there was a point I didn't even think perhaps I didn't know one day I'll be talking to a bunch of guys, to be honest. It's just luck and, continuing doing. And hopefully I was able to be consistent. And from there, we aim higher also. So some unpopular opinions, lack of knowledge of the market. Most people don't. There are a lot of people who are scared these people, this be how the markets did, this be how. People have some type of bias towards the market, and it's certainly fine because they have no knowledge. And people go in, there are a lot of people that you speak to and they'll tell you, oh, I put 1,000, oh, it's gone. How do you expect a doctor to go to school for 8 to 10 years to practice how to treat people before they can do operations? And it's not that what they are going to learn, those doctors are going to learn. You can't go to a library or wherever and buy the same books. If you buy those same books and read them, does that mean you'll be able to perform operations? No. People always think this and they feel trading should be different. If you don't practice, you are not going to make it. Don't think you have all the books. It's not going to happen. It looks easy, but it's not easy. Risk management. So this is going to determine how long you stay in the market. So before you get your strategy, you are testing and the rest. This is one thing that will keep you. This is the only thing that will keep you trading in the market. This is the only one thing that will keep you trading. If you don't manage your risk, how would you know over time this is what will happen? You need a strategy, of course. After you get everything, every variable you need a strategy. A strategy is everything we spoke about. Sorry guys, I had to close this door because the water was rushing. You need a strategy. I'm sure most of us have heard of this. You need a strategy to trade, and that's what we are looking for. Whatever this course is going to give you is to make you find yourself a strategy. The strategy I use, and that's the difference between what I'm trying to do here and what some other people do. Here you find yourself, you find what fits you. I might give you my strategy, but you won't be able to use it. That's why some people go, they buy EAs and they maybe 1 or 2 days the EA does well, and the third day they throw it away because they think it's bad. But it's somebody's strategy that has been quoted into the EA. That person's personality is what you are trading with. You cannot cope with that person's personality unless he himself copes with. He is the only person that can cope with his personality. That's how strategies are. Strategies are an extension of who you are. There are a lot of people who say this, do this. You read a lot of things. But if that strategy doesn't fit you, you won't be successful with it. That's it. I'm just doing enough talking because when we start, So perfectionists. Most people think. I personally, I don't expect to win every trade I take. I know I'm going to lose some. But in the long run, the more the wins I make will cover up for the losses. That's how trading is. Don't let anybody talk you, try to sweet talk you that, oh, I'm making 100%. My brother, we all take losses. Every trader takes losses. Every trader takes losses. But it's what you do, your risk management, everything will quantify how long you stay in the market. So perfectionists are people who say, I'm looking for 15 pips today. I have to make that 15 pips, do or die. So they'll keep trading and trading and trading and losing and losing and losing and losing until they finish their account. They know that before they realize they haven't made the 15 pips. Perfectionists, the market can't be perfectionist because you are not in control of the market. Revenge trading, greed and anger. So most people also fail because they don't have self-control. When you lose, you want to make it back. That mentality, you shouldn't have it. And this greed, the video I sent you guys is a good example of greed. You shouldn't do that. That is gambling. You want to take everything at once, forgetting about what might happen. The temptation is always there. Even when you master yourself, the temptation is always there. So it's a constant reminder of yourself. It's constant. You constantly tell yourself, no, don't do it. Don't do it. Don't do it. It's a conscious reminder. It's a conscious thing you have to tell yourself every time. And anger also, most of the time, this is very important. The market doesn't care about you. Remember, there's $6 trillion moving around from over 10 countries, 15 or 20 countries. And everybody's emotion is what is moving the market. You have a lot of people's emotions that have been summarized, that people are buying and selling. And you think you in Africa with $2 in your account would allow the market will allow price to go up or down. You are not in control. That's what most people fail to understand. So it gets to a point people get angry that, oh, why am I not making this amount of profit? Maybe you lose one, you are like, no. Or you have an issue somewhere with maybe family or something, and you are angry while you are trading. You should be able to separate that anger from the mindset of trading. It won't work well with you. You can't bring your problems, your emotion to the market. It doesn't care. There are two different things. They won't mix together. So if you're having issues, you should know this is trading. Don't come and even prayers. Okay, prayers. I think prayers work. But I'm not saying prayers work. You understand? It's good to have beliefs, but don't go and buy anywhere or sell with. You have some money, you go and buy or sell, and you are praying that, oh, please God, let euro US dollar go up today. It's not going to happen. So I think that's all, guys. Basically, so try and rewatch the video because there's a lot of talking. So perhaps I want to rewatch it. I'll just try and finish the recording today and put it out there for you guys. So any question will be totally appreciated. I totally love any question. Maybe on the Slack, you can put it on the Slack and I'll answer you straight up. So this video doesn't get long. So thanks for the audience, guys. We'll talk just now. Any questions? Just put it right there. Let's
question.
take care, guys.